Good evening, everybody. All right. Before we get started on the stock market stuff, a lot of people are asking about our mini training session, so we decided we'd go ahead and do the prelude of why commodity trading is very, I want to say, profitable using no, I think the groundhog saw a shadow and said there's 6 more weeks. 6 more weeks. Uh, what was I saying? Oh, so I trade commodities during the day, usually cattle, soybeans, the dollar, and there's a reason for that. If I'm sitting here and I want to make money, I want to make money using the candlestick charts as fast as I can. So commodities move around a lot better, and if I want to put on a longer term position, oh, I don't even think I have that. Well, I can go to the live when I go to the live. Oh, Tim, you're from Conroe. I used to live right there in the Woodlands, and we still have a house over in Conroe. I can't remember the name of the street. I should. I pay a mortgage payment on it every month. Okay, so let's go quickly. I can't even remember the name of the street that I lived on. Sometimes I can't even remember the name of the street I live on now. All right, so commodities, currencies, all have a function of supply and demand. And that's basically any commodity that requires that can go up and down in price, obviously. And this is a few cows I have out in the backyard. Darn, I can never see my backyard fence anymore. However, there's a difference between minus 35 tomorrow. All right, there's a difference between trading stocks and trading commodities. For example, if you're trading cattle, if you've got a $20,000 account and you decide you want to buy a contract of cattle or sell a contract of cattle, it doesn't matter where the price is. You're buying it right at that price, and you're using up 1,320. Now that's a while ago. Now it's about 1,900, but you're using up 1,320 of your equity in your account. So that means if you bought 5 contracts, that would be, I can figure this out, 6,500. That would be the amount of margin that you would be going against in your $20,000 account. So you're using 6,500 of it. Now, the difference between the price of a commodity and a stock is that as soon as that commodity, let's say you bought a contract, as soon as it goes up, that's adding equity to your account immediately. Whereas if you own the stock, you have to sell it before that equity goes back. Obviously, if it goes down, it's immediately taking equity out of your account. But the reason they have different margin values is each brokerage firm decides how much risk they're allowed for you to take. So right now, crude oil is, I forget, $6,500 a contract, and maybe gold is 4,500. So they'll base it on the volatility of that the price move. A while back, crude oil was 5,300. So that meant if you were buying one contract of crude oil, they would margin or take or just kind of attach $5,300 into your account. Now, there's different things that you have to contend with. Limits. And limits are good if you happen to be on the right side of the trade. They're bad if you're on the wrong side of the trade. But that's where we're going to be showing people how not to be on the wrong side of a trade. And it will show what that limit is. So on, I think this was live cattle, but if it went down $3 a contract, that's $1,200 profit. Or if it went up $3. And then they would stop it there. And the reason for that is, in commodity trading, prices can just move up huge. And if you're long or short, I mean, the price may move drastically against you and not only scare you out of the trade, but maybe it uses up all your equity, and that's what they try to protect from. So at $3 or 3 cents a pound or whatever they use, they stop trading. That's the limit for the day. It can't go up or down any, or it can't go up any more than that or down any more than that. And that's so that panic doesn't set in, but once it hits that limit, it stops the trading for the day, and it stays there and lets everybody get a cooler head to see what they should be doing. I made so much money this week, I'm buying a classic 1980 Chevette with black rims. There you go. That's I have no idea. But that's the way they do it, so that that's just how the market has been set up through years of trading. So if I'm sitting here day trading, not trying to make 3%, 7%, 20%, which would be a good stock return, especially if you're trading options. With commodities, there's no problem whatsoever of making 50%, 100%, 300% on a trade on any given time frame. So anytime we see the same signals or patterns that we see in a stock symbol, is there a stock symbol? Is there a stock symbol? What's that mean? Is there a stock symbol? Raju, I don't understand that. No, you're trading usually futures on a futures exchange. Oh, like wheat? I think it could be. It might be COW, C-O-W. Jace, I use Thinkorswim because out of that one account, it used to be where if you were trading commodities, you had to move your money over to a commodities account. Well, Thinkorswim got a little bit more creative that you can have your money all in one account, so you can buy stock, options, futures, currencies, all out of one account. It doesn't have to be shifted back and forth. And the later you can explain the J-hook pattern, how it's different from a flag or a pennant. All right, when we go to live charts, Robert. All right, so if I'm trading something like this, notice right here, it's down the limit. And that's where you want to be caught if you're short. You want to be down the limit, because that usually means if they're selling so much, they're not raising it back up. That means there's still a lot of sellers. The next day it might gap down again, and that's where you try to all Is it? I don't know that for a fact, gents. Usually they stay relatively close to what the commodity exchanges require for margin. YM, I have no idea. How long do you hold futures contract? RK, it all depends on what your strategy is. If you're holding for a few days, or if you're a swing trader, you see the trend is going, you might hold on to it for quite a few days. If you're a day trader, you might be getting out when it's down the limit and see what happens the next day. Looking at 2016. Yeah. Hey, that's just because these are illustrations. How could you even see that? I'm looking at them. Oh, it is. All right. But these are just to kind of show illustrations. We can look at live charts. And we'll show how you can trade depending on what your time frame is. Whether you want to do a 1 minute, 5 minute, 10 minute combination, or a 5 minute, 10 minute, 15 minute combination. You work that out so that you're trading in the manner that you want to. So you might trade off the 15-minute chart if you see something now turning into a downtrend. Or trade a little bit quicker off a 5-minute chart. So it all depends on your nature. But the charts are just the same signals. So if this was wheat, a big reversal, and you may have held on to this. Now you have the same basic rules that you have as a stock move. You can stay short until you see a buy signal and a close above the T line. Ray, they open at the same time, I think at 9:30 in the morning. Now some of them are different. Some will open at 9:45. Some of them will open up earlier and then shut down. So it all, one of those slides that we were looking at, it will show the times. And then a lot of times they will shut down. I know that cattle and the soybeans and all of them shut down around 2:05 Eastern time. I think soybeans and wheat shut down at $2 or 2:15. Do you chart these on? No, Jace. I use CQG, which is what we usually use to demonstrate each night. The reason for that is CQG, Metastock, they have all the trading entities on there. Joanne, the T-line is the 8 exponential moving average. And it is very powerful as far as if you see a candlestick sell signal and a close below the T-line, you know you can stay short till you see a candlestick buy signal and a close back up above the T-line. And it works in all time frames. This is a daily chart. It could also be the 10-minute chart or the 30-minute chart. All again, what you want to be trading. So what we look for is the same signals we would see in a stock chart. Bullish engulfing signals, or on a 10-minute chart, same patterns. Barry's J-hook pattern. And same scenario as far as when do you take profits. Again, this could be a 10-minute chart. This could be a daily chart. When you start moving too far away from the T-line in the overbought condition, That's when you want to start taking profits. And so if you're up here, again, same strategies. That if I was long lean hogs and I saw it have a big day on this day, what is our alert? Look how far away you are from the T-line. What do you do then? Like any other trading entity, you watch your 10-minute chart, and that's telling you that's right where you want to start taking profits. Why would you take profits on your 10-minute chart? Because the daily chart says you're way too far away from the T-line. So it just works as a very good, and I've also discovered that if this is, again, a 10-minute chart, and I got in where I thought I should get in, and stayed with it, stayed with it, stayed with it, when you see the first sell signals, take a profit. And I'll be showing that type of trading strategy on Saturday. Again, Saturday is going to be kind of a way to trade commodities on a, whether you're trading daily or meaning swing trades or intraday, it's all going to be the same analysis. Which way is the daily chart going? Is there a trend? And what are my intraday charts? Now, I use the 10-minute chart as my bellwether, just because it's worked so well through the years. So if I'm looking at if I'm looking at the 10-minute chart and start to roll over, then I'll quickly flip to the 5-minute chart and say, they're starting to take profits. Let's close out the trade. But then I might look at it and say, oops, we're way up here, and they're starting to trade below the T-line on the 5-minute. Let's start thinking about shorting. So I might, in that case, be using the 1-minute, 5-minute, 10-minute combination. Check with your broker for the symbol, for the contract, other parameters, the contract margin, overnight margin. Yes. And you'll learn that pretty quick. Now remember, we can scan, I don't know whether I've got that built in here. We can scan for stocks in a matter of a few minutes because we can put it, once we have our scanning formulas in, the what we have to do is refresh everything, and it pulls up the charts that we want to be looking at for the next day or the time frame. Now, we can't do that as easily with futures. However, there isn't that many futures that you really want to trade. You've got the 3 grains, you've got the 2 meats, you've got 5 or 6 currencies, you've got what they call the softs, which are cotton, coffee, sugar, and there's one more and I forget. But in total, you've only got about 30 that you really can trade because they're the ones that have the big enough volume to get in and out quickly every day. And oh, I forgot to call. Raymond, are you in here tonight? Yeah, there you are. I meant to call you and tell you that I use Thinkorswim for my trading. Don, it all depends on how much time I have during the day. Now, I'm trading mostly hogs and cattle and sometimes the grains because I don't have enough time to sit and watch everything. I can put those on my chart, on my screen, and they don't move around so viciously that I'm going to be taken by surprise. They move relatively slow, but you know, kind of a more structured move. I do hold these trades overnight if I think the trend is still going in the direction that I want. And again, that's going to be all a process that we go through. How do we know how to stay in a trade overnight? Is it doing what it's supposed to be doing as far as a downtrend? Bonds, yep, anything. Pork bellies aren't traded anymore, and I think that's because the pork belly traders were probably 1 degree below legalized thieves. Not above, below legal. They were worse than legalized thieves. I used to make good money trading hogs, cattle, everything else. And then I'd look at the pork belly chart and say, I'm going to try it again. And every single time I traded pork bellies, they just took my money so quick I didn't know where it went. So finally, I got smart and said, don't trade pork bellies. It's like going to the doctor and say, doctor, my arm hurts every time I lift it up here. What should I do? And he goes, don't lift it up there. Don, that's exactly what we're going to be doing. Where do we set our stops? Start establishing positions and or closing bad trades. Where do we add to a position? Now in stocks, remember I tell people I don't add to a position. I decide what my position is, which is a percentage of the total portfolio. But on commodities, because your equity is improving, if you're heading in the right direction, you can start adding to that position as long as you think the trend is moving in the right direction. So on something like this, if I bought or shorted 4 contracts and it was still going in the direction, might add 2 more here, might add 2 more here, kind of enhances the returns. Do you trade futures for Forex? No. I don't do anything with Forex. Who was I talking to? Talking to somebody in the last couple of days about trading Bitcoin or cryptos. And they said, can you explain that to me, what that is? And I said, I've had it explained to me dozens of times. And every time somebody explains it to me, I know less than when I started. So I've got enough things to trade that I know instead of trading Forex, I would rather trade the dollar or the British pound if I can see that it's moving in a direction. I can trade oil, or silver, and when I get to the live charts here in a little bit, I'll show how you decide which ones you're going to trade. Do you do better with commodities or stocks? Richard, that's sometimes you hit a good commodity trade, like lean hogs right now have been extremely good. Just covered some short positions. So again, that's the whole process of deciding what you're going to trade and why futures are a better place to trade if you don't want to sit around waiting for a stock price to move. Ray, when I was in college, I came within minutes of owning a carload of Maine potatoes. And even being in a jock fraternity, we had about 15 of the varsity players. We had a bunch of lightweight football players. We were mostly all jocks, but there was no way that we could eat a carload of potatoes. Arcade, again, it's a function of what does that trade look like. If I decided I'd go short here, and I day trade it, and then see, well, it's trading well below, maybe I'll hold on to it. I'm going to turn into holding that longer term. Live cattle is /LE. Yeah, I will get to some of the live here in a minute. So, anyways, here's the mini spotlight again. We always advertise these mini spotlights to be an hour. Figure you're not going to be out in less than 2 hours. Becky, if you want to put the link in for everybody. Now, this is also going to be a prelude for day trading, whatever you're day trading, whether it's stocks, futures, currencies, that we're going to be doing on the 18th. What makes a contract O? What makes a contract O? What makes a contract? They're already pre-described. Let me go up and see if I can find one of the... So one contract of live cattle is 40,000 pounds of live cattle. And then every time it moves a tick, it's 2.5 cents. Or tick size. Tick value is 10 bucks. So if this moves down 1 cent, it's $40. Is this commodity? What makes a contract? Is this commodity? Today was a big gap up on live cattle. Okay, let me do this again. Here is the link. So it's going to be pretty much 2 hours of what the contracts are, how you decide which ones you want to go after on any given day. Now remember, I've just got to give a prelude here that since there's only about 30 different contracts that you want to trade, there are things like lumber, orange juice. I used to have eggs. I don't know if they have eggs anymore or not. But usually those contracts traded so thinly, you had a hard time getting in and out of them. So you want to stay with the ones that have good volume to them. And there's only about 30 of those. So that means once you've gone through and visually scanned to see which ones are in a trend versus moving sideways, you're probably only going to come up with 1 or 2 that are viable to trade on any given day. And more than likely, if they're viable on that day, they're going to be the ones that are viable to trade for the next 2, 3, 5 days, where the rest of them are still just kind of in sideways trends. Still have milk, but very thin. That's the very thin milk is skim milk. Where'd they get this stuff? Joe, usually not. Usually what will happen is when you get to, what is today? February. The February contracts may start expiring or getting toward execution on, I'm just going to pick out a date, like February 15th. Well, usually your brokerage firm will say, all right, we're getting too close to execution. Now the lead month is March. So they will likely say, all right, you can't buy any Februaries. If you're going to trade, you have to go out to March. So that keeps you away from ever having to be worried about getting executed. Okay, so let's do this. What am I doing? Is that in the screen, Jim? Is it the third Friday? Yes. Saturday will be recorded. Yeah, I don't know the exact date, Bill, because you don't even want to be in the ones that are getting close because the volume dries up. When they flip you over to what they call the front month, that means that's the month that's being traded. Might not be this month. The front month now might be out to March. Should I be worried about trading something where I could be executed? Mean shot? Not really, unless you're trading gunpowder. No, there's very little, you're not going to get executed because what you're doing is you're buying a piece of paper that says, I am long or short. And nothing happens to that piece of paper until you decide. So if I'm shorting something, let me get to LHAG23. All right, so you can see on this trade right here that we've been short for quite a while because it could never close back up above the T-line. Now, there are times we'll take profits even though we haven't closed up above the T-line, like right here. Taking up. We're in the oversold area. They may be bouncing. Got good profits to take them. Well, a few days later, it shows they're not going to go up above the T-line. There's your bearish engulfing. You can go short. Now, remember our trading, well, this is what we're going to be showing is our trading rules, that if we're short, especially in the oversold area, where do we have a safety stop? At the previous day's open, like we would do on a stock. Yeah, Dylan, you can either just buy it and they send it right out to you after it's done. The only disadvantage is, obviously, if you had a question at the time, if you were at the live one, you can ask that question right then. If you're looking at the recording, you may have to write down and say, yep, I need to check and ask that tomorrow in the chat room. Do you determine the symbols? Or how do you determine the symbols? Because G is February. I think if you went out to H, oops, no, F dot L H. The next one is April. That's J. So there's different symbols for the different months. Yeah, sometimes, yeah, you might have a set or a bunch of commodities that expire in January, April, whatever 3 months. The next, there might be another batch that expire in February, and so. But you're going to know that well before you get into the trade. First of all, right now, you probably couldn't buy the Februaries. If you had Februaries, you could sell them, but you couldn't buy them. So your brokerage system will already automatically tell you, or if you try to buy a February hog, they might say, this is not the front month. Go to March and or April. So it kind of already directs you away from getting too close. Yeah, oops, I forgot the metals. You know, we've got gold, silver. Now, things like copper, platinum, and some of those are also pretty thinly traded. Not terrible. So again, you've got about 30 different entities that you can trade. Whoops. So I don't trade Forex, but I'll trade the dollar, because at least I can analyze what that's doing in one direction. If I look at a chart, we're kind of getting off track here, but this chart we can see started up, nicely. But if I was looking at something like this, I could quickly analyze that March wheat really isn't going anywhere. I don't know whether it's going up or down, whether it's sideways. So I can look at that instantly and say, that's not something I want to trade because there's really no direction. Might do the same thing with soybeans. I can't really tell which way that's going. So in an instant, you can say, don't know which way that's going, so we're not going to trade soybeans. And you can go through these charts. Now, which way is crude oil going? Well, obviously, you can see it's in a downtrend. So that might be more feasible to trade in the downtrend. But you use the same analysis you would on any other thing, where there might be a support level. Well, right about there. So we're getting toward the oversold area. I've got to be a little bit more careful about going short at this level. If you trade options on futures, you can. I don't. And it is a good idea. In futures, you can lose more money than what you put in. So let's say, for example, trying to find something. Let's say, for example, you shorted, or you were short here. Let's see. You shorted here because you thought it was still going down. And then they blasted it the other way. You might lose more money than what your account has. Whereas in the futures or the options of futures, you're only going to lose the amount of money that you have in that futures trade. Oh, I used to know what the 10-year note was. I know one of them is U.S. Oh, that's the 30-year. If it goes limit in the wrong direction, options can't lose more money than the cost. Correct. Your option price is what you've got in it. If it goes to zero, then that's it. Is that a general rule? Always set a stop loss at previous days open or leave it there and adjust it each day. Well, usually if you're going to be trading futures, you're going to be watching a little bit more scrutiny. And yes, it's kind of got the same parameters as a stock, that if I shorted right here, I wouldn't want to see it come back up here. If I was still short here, then I'd probably move my stock or stop to here. It can gap, yes. There's your kicker signal. So it went from here to here, gapped up in the opposite direction. All right, so you've got crude oil, you got heating oil, you got natural gas, you've got wheat, soybeans, corn. Now corn's even a little more conservative. Well, for sure. So, would I be trading corn? Not really. It's not going anywhere. So I can look at this chart and say, I wouldn't be trading this. And then if I was trading something, let's decide I decided it was live cattle. Oh, I did that wrong. Well. This is just not working. What am I doing wrong here? E-L-E-G. That might be it. Say I decide I'm going to trade live cattle. Now I forgot why I decided I was going to trade live cattle. I might be trading this for 4 or 5 days. By that time, there might be other charts that are, if I came out of this trade, now I look and see what's ones of the other 30 are going to be trading well. What is it doing since NGAH3? Natural gas, as you can see, is still in a downtrend. Now that is March. Now obviously March natural gas is going to be heading lower because by the time we get to March, the heating process diminishes. Bill, that's true, but that's not necessarily why you're looking at a chart. Remember, the chart has already got everything built into it. You take seasonality. Surely no. That's everything. Now I'll look at that and say, all right, what does wheat do, or what does soybeans do this time of year? You know, historically they go up or down, but I don't take that as gospel. I look to see what the chart itself is telling us. All right, so the whole point of trading futures is if I spent or used $1,900 of my margin today to trade live cattle, by the end of the day, that $1,900 may have produced $700 worth of profit. So it's got a lot of money in a short period of time. So it goes back to, if I'm going to sit here and I'm going to trade something, I want to trade something that if it moves in the right direction, I'm making decent money. Okay, so we will be doing a mini training on when to buy, which ones to buy, how you use your, or how you use the margin, knowing what the limits are. It's big leverage. So why are we using it? Because we're using that leverage based upon knowing the high probability of what pattern is setting up or what direction it's going. Not really. It's just a piece of paper that says you can buy whatever the underlying entity is out in the future. So a futures option and a stock option are kind of the same basic trading entity. Oops, we went way over time. All right, let's take a look at what the market did today. If there's no more questions on option or futures trading. Now remember, candlestick analysis was developed on the most boringest, not a correct word, the most boringest commodity in the world, and that was rice. And so that was to point out oh, yes. Let me go back to hogs. So if you bought 2 contracts of hogs, or shorted 2 contracts of hogs for $4,200, probably by the time it got down here, you had a $16,000 profit. Yeah, rough rice has futures, but it's still boring. So anyways, this is what you want to get stuck in. Now, in this area, you might not be trading it. But notice all the things that told us, well, maybe you want to start looking to go short here, because for the 3rd time they came up and failed at this level. And then when they closed below the T-line, it said, all right, let's watch to see if they come down here, or if they're coming down to the bottom of that channel. You can trade the E-minis, the YMs, yes. So you're not restricted, or you're not, when I say you're, yeah, is it NQ or is it just the Qs? Yep, so you can, now, you want to trade the E-minis because I think that is a $5,300 contract, whereas a S&P contract is $25,000. Oh, I don't trade those anymore, Don. I'm sorry, I didn't read the question. I used to trade the E-minis when I was younger, when I was back in Houston. And I would trade off the 1 minute, 3 minute, 10-minute combination. But as I got older, I felt like a wet dish rag by the end of the day. So tried to find things that were slower moving. Okay, let's take a gander here at the markets. Now, you can see the wedge. I'll redo it. Under your wedge formation, which gave us the a gander is taking a look at something, Darren. You've never heard that? So what were we anticipating about this sideways movement? Well, it would have to break out through this level to tell us they were heading higher. And it's also somebody, oh, Darren's trying to see here, right. All right, and so what did we know about the NASDAQ? Well, there it did that J-hook pattern, and today it gapped up. Pretty exciting, except for the fact that that's why I put out in the YouTube this afternoon is the candlestick psychology, which is the kind of the professing of the Japanese race traders of what most people do. Most people buy exuberantly at the top. And the reason I am so familiar with getting ready to take profits was before candlesticks came along, I was the one buying up there. I'm thinking everything's wonderful. And then as soon as I'd buy, everything turn around. Now we heard, or now we can see that's where the exuberance is coming in. Now, I'm going to take a quick look at what the, well, I'll be a son of a gun. I would have thought the futures, well, the futures on the Dow aren't moving very much. I would have thought after all the biggies had missed, Apple sold off because it missed, Amazon sold off, Google sold off, Ford Motor Company sold off. So I was, oh, yeah, I'm looking at, I'm trying to find, I never play the NASDAQ futures. I usually just look at the Qs. Raymond, what's the symbol for the NASDAQ futures? Anyways, the fact that they gapped this up in the overbought area told us that we want to be a little bit more cautious that if they start selling this off, that was the exuberance up there. Where would they likely be bringing it to? Back here is NQ, NQH23. What about NQEH23? Let's see. But if I just do NQ, F dot, this is great. just NQ. But is it trading after hours? Okay. So if it was up 183, it's going to be back pretty close to where it opened today. Which means, remember our sell signal, even though it's not a signal, if they trade back below the open of the previous day, that's telling you, especially up in the overbought area, that the sellers are taking control. And so we saw that same scenario over here on the SPY, the S&P 500. If they start trading this down, likelihood they're going to bringing it back down to the T-line, at least. All right, so Carvana is a perfect example of where you want to take profits. This was a perfect trade. Buying right here because you had the left-right combo bouncing off the 50 where was a prospective target up here. Is it NE? H. That's the New Zealand dollar. And Q6H. No, I still can't find it. Oh, I'm on CQG though. I'll have to find out what it is. Oh, Raymond, you've got CQG. Yeah, so I'm suspecting we're going to see a little bit of backing off. Now, all right, so let's go back to Carvana. Common sense trading that when they gap this up in the overbought area, close to the overbought area, and it started trading up, where was the logical place to put a stop? Right back here. Now, did it come straight back down there? That's where the 10-minute chart becomes your effective trader. So we took profits up here. We rolled out into, I think we came out of the 10s and went into the 1750s. But then look what happened right here. That's where they started breaking down from this wedge type formation. I just did that NQ. So, all right, so that's the process for when you're up in the overbought condition. You've moved that far away from the T-line. Remember the natural course of the effects of the T-line. The further away you're from the T-line, the higher the probability it's going to come back and test it. Which one was that? NDAH. All right, let's try one more time. NDAH 23. That's not doing the after hours. All right. One more. NQH3. Nope. All right. We were done with that. Yep. It's kind of the same scenario. Now that's a different scenario in the sense that it's really not way out of the range, except when they gapped it up and came back into the trading range, that told you it was time to get out. The green line is the 3T line. The further away you are from the T line, the more relevant the 3T line becomes. And it also works as an additional indicator that if you see the 3T line crossing the T line on the if you see the candlestick signal crossing the T line and the 3T line crosses, that's just that a little bit additional confirmation. So these are the type of patterns we want to find. Here's your fry pan bottom, there's your J hook right here at a double breakout area, meaning breaking out through the beginning of the pattern and breaking out through the 200. Now we're seeing it as a J hook type setup at this level because of the pattern. Everybody else is watching to see if they're going to get it up through the 200. That's the reason they're buying. Same scenario on our recommendation today on BBIO, because it came up. If it opened positive, everybody was piling in. GNS, this is why you look for these alerts, because that tells you something new has happened in the investor sentiment. Now there's your message. Gapped open and immediately started selling off. That told us the buying or the selling had stopped, but it didn't confirm. However, look what happened right here on the T line. There was the buying again. So what did this overall reaction to this indicate? That this was a major change of investor sentiment. Look for these type of moves afterwards. Travis, I'll look at it. What is this one? That doesn't even look familiar. Oh, that's GNS. That's what we're doing. So this is the exact reason why you want to know which signals and patterns are the strongest. Here's your best friend breakout. There's the result. So we're still long IOVA. Riot. There's your wave 1, wave 2. Where did wave 3 start? Up through the level everybody is watching. What's our expectation? Wave 3 should be the same magnitude as wave 1. All right, I'm going to try one more. N K D H. No, match the guy not. I'll find out from PQG tomorrow. Affirm. Doing exactly what you suspect coming out of a fry pan bottom. Basically closed right here at the 200. Which also occurred in QuantumScape. Closed right there at the 200. So this makes it fairly easy. If you were trading this, they open this lower, you take profits. They open it higher, you stay long, but you put your stop at the 200. It shouldn't come back through that level. And I know a lot of people are still following Mullen. That's got a good chart to it with the expectation that if this is a trend channel, it could be heading back up here to the top of the channel. Relay. You just stay long on something like this. Again, there's your big breakout. There's your 45 degree. And we saw that same thing. Where did it go? I should be getting to it. RVNC. Nope. RVNC. There's your 45 degree. Okay, airs heading for the 200. So if it hits the 200 tomorrow, what do? You flip to your 10-minute chart to see if there's enough strength for it to get through. Lithium, same thing. Sitting right here at the 200. If this opens positive, what do we got going on? We got a bobble breakout. And Sophie, that's your shooting star gap up doji. That tells me if I was long, I'd have a safety stop right at today's low. It shouldn't come back in that direction. Now the biggies, we don't have good charts right now because I think Amazon is now trading back down here in this range. So it's going to be important to see where they open these. How far down is Apple at this point? And Tesla. I think Tesla even backed off after hours. All right, so here is that example that if you see something close below the previous day's open, close it out. That means the sellers have taken control. Leslie, yes, they all missed. And Ford Motor Company missed. I think Starbucks missed. Google missed. Oh, you have Google. So Apple trading down in this range. So that's not going to be good for the NASDAQ tomorrow. And Ford missed and whoops. So I think it was trading. Oh, there's something wrong there. That 200 is not in the right place. And QCOM missed, yes. Okay, so somebody was asking about a J-hook. What was the question? This is a J-hook, where you can see how they're ready to hook this back up. This is a potential J-hook plus. It's a J-hook pattern setting up, and the plus is that you can see exactly where the support level was. Oh, the difference between a pennant and a flag. Difference from pennant or a flag. I think they're all kind of the same terminology. Whether you want to call this a pennant, a flag, a wedge, compared to a J-hook. J-hook is got a strong prerequisite. The prerequisite is that you have a strong wave 1, then a wave 2, and a wave 3, whereas a pennant is kind of a sideways move. This session is recorded, yes. Oh, that's okay, don't worry. I'm going to probably keep babbling on here for another 45 minutes. So there's another J-hook plus, meaning not only is it setting up a J-hook pattern, but you can see where everybody else was seeing it was acting as a support level. So not only was it a J-hook, but it was doing it at a level that everybody else was watching. And I guess JetBlue, Another kind of bobble breakout. AGL. There's your bobble breakout. So these are the results, because as soon as we can see they're setting up and going through, we can be buying right here. What's everybody else watching? They're watching to see what's happening. Yes, so there's your perfect J-hook pattern setup. Kind of a bobble breakout also. And, oh, this one, ZNTL. Also setting up that if this opens positive, it's going through. Is this? Yep, there's kind of your bobble breakout with a best friend. Oh boy, we got so many patterns. There's your fry pan bottom breakout on DBI, Zim. There was your fry pan bottom breakout. There's your results. Fiber. There's your fry pan bottom breakout. So this is what you expect coming out of these patterns. What's the difference between a J-hook and a bobble breakout? Nothing. A J-hook is a J-hook, meaning it occurs. That's not what I wanted to do. This one occurred at the T-line. The reason that's just a J-hook is we're the only ones that see the T-line. Everybody else is just seeing this slow curl. A J-hook plus for a bobble breakout is, I've got one here. Where is it? Where is it? No. That's your bobble breakout. Notice they came up, failed at this level, pulled back, and what's the visuals that we can see? They can never really close this below the T-line. Now, if you took the 50-day moving average out of here, that's a J-hook pattern. But the fact that we can see that they did it right here at the 50, this is more powerful or more a higher probability, because we're seeing the J-hook, but as soon as it goes through the 50, what other group of people are buying? Everybody that was watching to see what it was going to do at the 50 started piling in. Not really. No, that's just an uptrend breakout. Would you say most of the big price movement occur in the open? Not necessarily, but there's a good prospect of that. Now, there's the old adage that the amateurs buy in the first hour, the professionals buy later in the day. And the answer to that is we don't care who is buying, as long as it's moving the price the way we think it should. What's Victoria's Secret's? All right. Anyway, there's a few more here. Oh, was it VSCO? That one. Yeah, so that's a bobble breakout. Fungu. That's more of a J-hook, because it just supported here, then went through the 200. And one more. NEOG. That's kind of your J-hook plus. They use the 50 as the 200 as a support and then head it up. Fry pan bottoms are working. Or another way to say it is, if you find a fry pan bottom that's working, more than likely it's going to continue to work even though the market may have turned, because that was a buildup of investor sentiment. Oh, I didn't read it. Booble breakout. All right. That's because I'm a speed reader and I read so fast. Nordstrom's also had a nice fry pan bottom. So here's a thing that you always want to watch in a fry pan bottom. First of all, you don't want to see it close below the T-line. Secondly, if you see some of these belt holds, that means they've wiped out some of the sellers. So you've got the 50-day and the 200-day simple moving average, because every major money manager around the world uses those as making their decisions. All we're doing is seeing what their decisions are at those levels. The black line is the T-line. That's the most compelling trend indicator out there. Because if the definition of a candlestick signal is the graphic depiction of investor sentiment, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you've got a very strong combination. The gray line is the 34 EMA. It works reasonably well. What time frames are your lines? It doesn't, no, they're all, it's not a time frame. They're the 50, the 200, the 34 EMA, and the T-line, 8 EMA. And they work on all time frames. So this could be a 10-minute chart. This could be a 30-minute chart, an hourly, a daily, a weekly. It doesn't matter. They all look exactly the same. All right, let me get through a few more of these. ALT. Oh, what is that? Oh, for crying out loud. Isn't that nice? I don't know where it came from. Yeah. This is called your McMuffin. There's your morning star signal, followed by a doji sandwich, or your morning sandwich. You may see that one on the recommended list tomorrow. The reason for that is, first of all, we know the morning star signal is one of your 12 major reversal signals. It usually provides a high probability of the reversal. We know that the doji sandwich usually has a high probability of more upside. So when you combine those two, you just got a kind of a double whammy of bullish sentiment. Now we also know that if you see signals in the overbought area like a hanging man, have your safety stop at a place that it shouldn't be trading. Now apparently they announced earnings and that gapped down. If you're in the overbought area, you see a potential sell signal and they're gapping it down the next day, there's only one thing you want to do, is close it as fast as possible. EXAS. There's your J-hook pattern setup. CNOP. There's your fry pan bottom series of dojis. You can get ready to buy this. First target, second target up in here. And in Microsoft, this is not after hours, but you can see that pattern, and look where they broke out. They broke out above the 50. That implies there's probably more upside. Now, Microsoft's not the best one to trade unless you're trading spreads, but it does give you a good indication that if it's trading positive, the market's not falling out of bed. Con, here's your J-hook breakout. Look for a 45-degree off of here. Your cruise lines, like Norwegian, there's your J hook plus, which makes wave 3 your likely prospect. So anytime you see this, it's because not only do we recognize immediately that's a buy signal off of doji, but anytime you see that, that means people are coming in, buying off of this level. The probabilities of heading higher are extremely strong. On the short side, because that's a play on words, Hanes underwear, that's a gap down. Bearish kicker signal, there's probably going to be more downside. Bearish kicker signal on advanced drainage, WMS. And Bill, oh, must be after hours they got slammed, failing right here at the 200. And BHE, another bearish kicker signal. ARIS. Another kicker type signal, kind of broke this downtrend. Bearish kicker signal, that probably implies there's going to be more downside on this one. And this one you might see on the recommended list tomorrow. The big bearish engulfing signal on light speed right at the 200. If this opens lower, you've got a huge reversal signal failing at the 200 after gapping up and selling off. And if it breaks this level, at least you can figure they're bringing it back down to the 200. I'm sorry, the 50. Okay, so that's about all I got for tonight. Spotify, you can see where it gapped up, putting you in wave 3. Open, at the other end of the scale, a $2 stock. You can see your J hook plus, confirming a fry pan bottom, and now they've gapped up in the overbought area. So if you've been long on this one, your safety stop is right here. So didn't we just do stuff on the safety stops a few nights ago? I think we did. Okay, are there any general questions on candlestick analysis? Oh, does anybody in here use interactive brokers? I am going to be doing a session for interactive brokers at 2 o'clock on Monday. Now I'm finding out, surprisingly, that in this day and age, there's a lot of people that still don't know about candlestick analysis. So if you think of it and you get the promo, again, I'll be doing a 2 o'clock session Eastern time for them on Monday. You might, if you're there, I'm sure there's going to be people questioning candlesticks. Might give a few pluses. Looking for the class on Saturday. All right, could you please describe a bit more what you're going to cover? We're going to be covering the mechanics of trading futures, how you find the best trades, which is more of a visual scan, and then how you set up your what trading strategies you want to do. If you'd like to trade real quick, you might use a 1 minute, 5 minute, 10-minute combination. If you're a slower trader, meaning you don't want to trade as much, you just want to kind of trade the trends during the day, you might use a 10-minute chart. Or use a combination of your 10-minute chart and your daily chart to tell you which way you want to trade and or decide whether you want to be swing trading or just day trading. Oh, on international interactive brokers? Yeah, I'm not saying anything bad about them. As a matter of fact, I'm trying to get those people interested in candlestick analysis. It's just surprising that there's so many people that do not still know about candlesticks or candlestick charts. All right, so anyways, if you're an international broker or interactive broker, yeah, kind of look out for our session on Monday in their room. All right, any general questions on candlestick analysis? If not, Jim, go ahead and do the double line. Uh-oh, I forgot to scroll down. That's yeah, IBKR. Is Steve Nissan still around? I haven't heard much about him recently. He didn't like me very much because when I started teaching candlestick analysis a little bit differently than him. All right. GIS. Yes, you could short this one. Good short. Quantscape, if this starts trading up through the 200 tomorrow, you want to be a buyer of this fry pan bottom breakout. And there's your kind of your J-hook plus on Carnival. Royal Caribbean, the same. Slow curve breakout. You could buy that one. Bristol Myers. That's not a real good looking chart. I'd be someplace else. No direction. Not anything I'd get real excited about. Vuzi. Another J-hook pattern. Now has to get up through the 200. AUZL, just stay long. You could still be a buyer of this with a little best friend type gap up. Sherwin-Williams, that's not real exciting until they can break out through this level. I think we did con already. That one looks like it's ready for a 45 degree. And mass, you could be buying this one, anticipating wave 3. ELF, ELF, fairly good earnings or something. Look for a 45 degree on positive trading. And Daku, I think I had Daku on one of my lists. That's a little slow curve breakout. Well. Well, what's going on here? This is not working. BGRY. That's great. That looked like that gap up. Now, If you didn't put your stop there, your next stop should be right there. I heard a guy comment the other day that technicals no longer work because of, nah, remember, just because you have AI out there, speaking of which, I forgot AI. Probably the percent of AI trade analysis is probably so minuscule, it's not affecting anything. That same question has always said, well, if everybody starts using candlesticks, won't they become ineffective? I think the statistic is probably somewhere around 1/10 of 1/10 of 1/10 of 1/10 of 1/10 of 1% of the people in the world use candlestick analysis. So here is that high probability trade. There's your fry pan bottom. There's your breakout level. And there's your trend kicker signal. What's the trend kicker signal indicate? There's usually going to be more upside. What's a fry pan bottom breakout indicate? There's usually going to be more upside. Right now, all you can do is stay long on this one, Mark. However, you're getting right there. So you've got to make sure it gets through this level. So I'd watch for sell signals up here. What you really want to see is it heading further. I mean, more upside. Meredith? Meritage? Homes? Oh, I forgot to pull up the homes. Now, notice what's happening. Now you're starting to see a little bit of enthusiasm. Start watching for your sell signals. Toll Brothers, same thing. They gapped up in the overbought area. Beezer, you're gapping up in the overbought area. That's pretty much a good indication that you want to make sure your safety stops are in place. And Zim, that fry pan bottom is, or breakout is still working. Interactive brokers. Whoops. Slow, steady uptrend. Other way around. Someone has to program. Bill, that's true too. And remember, anytime something is programmed, it's programmed by human input. Is it too late to buy ELF? No. Now you can see that it opened higher and traded lower. I probably wouldn't want to buy ELF unless it comes back up through today's open. Kodiak, you could be buying this one, not anything real exciting yet, but obviously heading in the right direction. And notice how it came back and used the 200 and the T-line as support today. Tro, got your bobble breakout. And then there was another one, Trex. Oh, that was your bobble breakout. Edit. Just stay long, but again, with a little warning that when they gapped it up today, just keep a safety stop someplace. Tesla. Oh, what the heck happens here? Tesla. Yes, you do have the doji. I don't know whether it actually closed lower after hours, I mean, toward the lower end of the range, so you want to check that. Yeah, DR Horton, same thing. They gap up in the overbought area. When you have, whoops, well. You have that extended uptrend. Look at your kind of your breakout 45 degree. When they start moving up, that means they're starting to buy. Did I skip a bunch? I did. Holy smokes. Oh, wait a minute. I did skip a bunch. What was I thinking? Anyways, if they're gapping up in the overbought area, get ready to, or keep your safety stops in place. CTVA, they gap this one down, you get ready to go short on any weakness tomorrow. Send email for Monday session. I don't have it. I think they would be coming from the promos from Interactive Brokers. Flowers, apparently good earnings. Look for a 45 degree. We did GNS. Still has the capability. Now on this chart, it looks like wave 1, wave 2, wave 3 could take you up to the $10 area. But on the other chart, it looks like it could take you up to the $20 area. Anyways, it just looks like it could trade positive from here. And Google, I don't know what that's going to look like. I think that sold off pretty hard after hours. I was wondering why we were going along so quickly. There's your J-Hook Plus. Stay long on this one. Mavis. Just stay long, expecting it to go to the 200. Gene. That's kind of a nothing chart. I'd be someplace else. NVIDIA, I think it sold off after hours, so I'd watch to see where that one opens up tomorrow. BABA, stay short. Carnival, stay long. Laser, stay long, but you can see that it failed so far at the 200. I'd have a safety stop at today's low. If it comes down through there, that means they're not going up through the 200. LAC, just stay long, but I'd have a safety stop just below today's low. It shouldn't come back down through that level. And Halliburton, stay short. Rivian. Kind of the same scenario. If they open this lower, they've failed when they hit the 200. I'm sorry, the 50. Sober. Shooting Star. Have your safety stop at today's low. Merck for a short. Yeah, you can stay short. Look at where the dumpling top dimple occurred, right there, your big morning star signal. All right, now we're back down to Tesla, DHI, Sober, ABA. I skipped a bunch. All right. The long wicks at the top are your shooting star type signal. Yes, that's telling you there's weakness. So the only, if you see one that has a big shadow to the upside, it has to open positive to stay long. CHS, kind of your bobble breakout. That's a good looking chart. Is that a symbol? Apparently not. Lucid, yeah, running into trouble. I'd be out of this one. So here's another one where when it did this, and look how far away you are from the T line, That's where you flip to the 10-minute chart and see whether you want to take profits. Right now, I wouldn't be back in it. I would have been out of it here, and I'd get back in it if it comes back up through that level. Yeah, get ready to take profits up there. These stocks have already broken out. Are these buying opportunities, or is that just chasing? Brandon, it depends on where it occurs. Which ones are? There's some fry pan bottoms. Now I can't remember which ones they are. If they're a fry pan bottom breakout, that means there's usually going to be more upside. And if the ones that are over here in the so if that's back to 202, yeah, so that's not going to be pretty on Google, which might mean we're not going to have a good looking NASDAQ. So this is probably, let me make sure. I wouldn't call that a fry pan bottom. That's not even the right one. That's square. You wanted SG. So that's kind of your fry pan bottom. Now remember, Brendan, that if you are gapping up out of a fry pan bottom, even though you're in the overbought area, that means more upside. If you were in a steady uptrend and they were gapping up, that means that's probably that exhaustion at the top. OM, just stay long. Wouldn't necessarily be buying here, but I'd stay long. Myra, you could. That would be your J-hook pattern. Now, I'd probably be more apt to go after Riot. Oh. Because you can see that is a good J-hook breakout. Didn't we do that already, Robert? The J-hook plus is at a level that everybody else can see that it's supporting. So if you took out the 200, that's just a J-hook pattern. But the fact that it's doing it right at a level everybody else is watching makes it that much more evident that that's where everybody's buying. So there is your J-hook plus on Carvana, because it did a J-hook off the 50. Whereas a regular J-hook might be evident to us because it's doing it off the T-line, but it's not evident to everybody else. So we can see it's a J-hook pattern setting up, but you get a little bit more force out of the ones where it's breaking off a level that everybody else is watching. I thought they reported the jobs. So the job claims were at 106 versus 173. AMGN, if you're short, you're down here in the oversold area. So look at your blue ice failure. Fell through the ice, came up, failed to find the hole they fell through, went to the bottom. Now you're getting hammer signals. So if I was short, I'd be ready to cover the short positions if they open this one positive tomorrow. Meta, yeah, you'd be expecting a 45-degree on positive trading from here. Oh, Brennan and asking, oh, like being at the doctor's office, the eye doctor's office. Now that one, you'd probably look for a 45-degree. Riot is just now breaking out. That'd probably be the best out of all of those. Spotify did a gap up. Your J-Hook Plus, just stay long on that one. Yeah, that one you don't buy. If you're in the overbought area and it's had a long uptrend. That one, yeah, you would be chasing. And QuantumScape, if it opens positive, you could still be buying this one. Silver, nothing. Would not be long or short. And wampum, that one, if I was long, I'd have been out of it today. Isn't Riot a shooting star? Not really, no. Just a good strong candle. Okay. All right. It'll be interesting to see how they open the markets tomorrow. Right now, the Dow is holding up, meaning it's only off 17. But it's going to be the biggies that are bringing down the NASDAQ. I'm still watching Havana, because if they open this positive and start taking it positive, that short squeeze process may still be in place. So even though this was not a sell signal, you definitely need to see it open positive and trade positive to stay in it. If it opens lower, it means they're still selling it off. All right, everybody. We'll see you bright and early tomorrow morning in the chat rooms. We'll see you then.